כדי לייעץ ללקוחותינו בניהול השקעות וניהול סיכונים הפיננסיים, אנחנו צריכים ללמוד ולהבין את המתרחש בכלכלה העולמית, בעולם הגדול. כדי להבין את כל זה, אנחנו נדבר עם דוקטור מנהלת הכלר. מנהלת היא הכלכלנית הראשית ו-CIO, מנהלת ההשקעות הראשית של בנק ההשקעות קרדיט סוויס בשוויץ. מנהלת מופיעה בבלומברג, אנחנו קוראים את הניתוחים שלה בפיננסים טיימס, היא בהחלט בפרופיל עולמי. אנחנו נדבר איתה על השווקים ועל המגמות לאור הקורונה ובכלל. מנהלת, thank you very much for joining us today from Zurich. We'll be glad to hear your analysis and views on the global markets. So, Nanette, the COVID-19, how the global economy will function subject to the pandemic, which is developing right now as we speak. Can you please give us a quick overview on the financial markets?
So we are now in the middle of the second wave of the COVID pandemic. Infection rates are increasing steeply in a number of regions, and for sure, this is going to have implications on how the economy continues to evolve in the course of the quarter that is currently running. It is not very likely that governments in many countries have the same reaction than during the first wave to completely shut down their overall economies. The cost of that is simply too high, and also the balance between the public health situation and the economic priorities is simply very different than in the first quarter of this year, when the world was for the first time confronted with it. Nevertheless, there will be regions that are more affected and others much less. For example, in China, the management of the crisis is very different from other countries, and the economy has really rounded the corner already. The implications are that really we will continue to see recovery also in economic terms. The manufacturing sector is firing on all cylinders, and even in the service, the consumption part of the Chinese economy, things are normalizing. In the United States, there is the hope for a vaccine being approved before the year end, and much will depend now for the fourth quarter on whether the Congress and the White House can agree to a stimulus package, a second stimulus package that allows them to bridge the period until the vaccine is actually agreed upon. One of the regions that will be most negatively affected, and this will also be visible in economic data right now for the fourth quarter, is Europe. Firstly, there is still a longer lag and period ahead before vaccines are being in the approval phase. And also the density of the population in Europe does require that some governments indeed have no other solution than to shut down parts of their economy, or certainly to take measures that will be disruptive, particularly for the service sector. So altogether, we should be expecting short term that there is a loss of economic momentum, and how much of that will translate into the new year is going to depend of a number of factors. Again, just to take region by region, the outlook in Asia, I think it is fair to say that the continent has probably turned the corner for sure. Not only is the biggest economy in Asia, China, probably going to be among the very few ones that actually can grow in 2020, but also do we anticipate a very sizable acceleration of that growth in 2021? Just to put that in numbers, we expect growth next year in China to be as high as 7% after having been through a slow phase this year, around 2%. In the United States, things look pretty okay. I mean, this year is going to be a recession and go down with a negative growth rate, but around as much will be added into the next year. We expect 3.8% in the US in terms of real GDP growth for 2021. Coming to Europe, where things are looking more difficult, more complicated, not only is this year a sharp recession with minus 8% for the whole of the Eurozone, but also next year there will be challenges ahead, especially if there is a third wave that is coming in absence of a vaccine being ready before the half of next year. So we anticipate a sizable recovery in Europe as well, but from a much lower base. And generally speaking, more volatility in the quarterly economic momentum and data in Europe.
So it is very interesting. Can the market survive without the massive central bank support?
What it means for monetary policy is that we should anticipate very accommodative central banks, interest rates by central banks being kept very, very low, and long-term bond yields really then being reflective of what the respective economies of countries around the world are doing and how inflation expectations are adjusting accordingly. In the United States, we are quite confident that there will be economic recovery and normalization of those inflation expectations. And so we anticipate a gradual increase of bond yields. For example, for the US 10-year Treasury yield, we expect around 1% being about the average for 2021.
So should it be bonds or equity preferred?
As regards financial markets, with low interest rates still prevailing, there will be an advantage for equities over many, many categories of bonds. Not only are low interest rates supportive for elevated valuations still, but also the earnings recovery that can happen quite rapidly in certain regions. Those that are going to recover most significantly is likely to sustain equities as well in terms of just their indices performances.
And what about commodities and currencies? As we have to have some decisions about hedging on those areas. So what about currencies to the next future?
Recovery also means that a number of commodities will be benefiting from it. We are quite confident that those parts of commodities that react to the business cycle will be helped by the recovery we project for the global economy in 2021. But also do precious metals and gold benefit from low yields, and especially if the US dollar was continuing to depreciate as it has done on trend in 2020, can gold also sustain good levels?
Has the COVID-19 shifted the world from a sustained growth and wealth creation into a long recession period? Or will it be, a short-term recession, and after that, the recovery will come much more faster?
A lot of people wonder whether this COVID episode and really crisis is going to have only temporary effects on the global economy, on sectors, and there will be a sharp recovery afterwards, or whether there are going to be long-lasting effects. And in particular, whether the ability for the world to create wealth will be affected in any way for a sustained period. What we can already say is that throughout the crisis during 2020, even as the global economy was sharply impacted by the COVID crisis and public health situation in many countries around the world, very severe, there has not been a change in global wealth. Every year, Credit Suisse produces the Global Wealth Report, which examines in detail how wealth is developing and also how wealth is distributed across countries. And in 2020, because of the help that central banks and governments have given, in particular to support financial assets, financial markets, which represent a very important part of global wealth, there has not been so much impact at all on the ability to create wealth, and wealth has not been destroyed on a sustained basis. In fact, we estimate that global wealth was standing at $400 trillion at the end of June 2020, while at the beginning of the year, we were around $399 trillion.
Very interesting, this recovery, but will the pandemic preserve the differences between regions and countries and sectors? Will some of them grow while the others just keep deteriorating for the near future?
Of course, regions have been very differently affected, and intuitively everybody should anticipate, and this is also the facts, that in Asia and especially in China, wealth has just continued to build on a per adult basis as well as on a cumulative basis over the whole of the economy. In the US, there has been a very little impact, and really the one region that has been affected most negatively has been Latin America, primarily because of the devaluation of their currencies. So there is the necessity to distinguish what is happening on the global economy and then what is happening on global wealth. Also, differences are stark, of course, on a sector-by-sector basis. For example, technology as a sector and people active in that area have particularly benefited, have been able to create a lot of wealth in this period, while other sectors more in the old economy will have seen wealth destroyed to some extent. So differences across regions and differences across sectors. Now, just to come back on the effect of the COVID crisis on the global economy and whether we should anticipate something temporary or something more prolonged is really depending very much on two things. One, how quickly we are able to approve vaccines, because specialists are finding that this will be the only way to deal with a pandemic that is actually becoming endemic, and where the immunity of populations is what is really central in terms of getting on top of this public health situation. And the second factor very much is whether populations are able to find the discipline to comply to rules and regulation and are ready to sacrifice some of their privacy to the higher public good of public health. It is very remarkable that in some regions, like Asia in particular, not only China, but more largely in the continent, because of a culture that is perhaps a little bit more putting more the public side on top of individual priorities, as well as a high degree of compliance and a high degree of trust as well in a number of countries in the governments. Take Japan, take Taiwan as examples of that one. Altogether, the Asian continent will probably see a V-shaped recovery. In other words, there was a shock, it was temporary, and after that, the economy is really quite rapidly on course to get back to long-term trend. In other countries where this is not the case, where a vaccine is not around the corner so quickly, where also populations are putting their own individual freedoms relatively high, as opposed to the public health situation, and where compliance to rules and regulation is relatively low. In these instances, the economic shock that the COVID crisis represents can actually have sustained implications. And that would be certainly one region that is at risk for such a pattern. That would be Europe. With regard to sectors, there is no doubt that certain sectors will see a complete change of their consumer behavior, their clients' behavior for years to come. In particular, some areas such as travel will have been disrupted in probably a persisting way by the fact that at a very large scale, the COVID crisis has allowed businesses, corporations to experiment with remote working and not so much using this particular side of services.
So, Nanette, does the world is really being changed right now? Do the market facing a new world ahead?
How will the pandemic change the world and how it's organized by sectors and so forth? There is no doubt that the pandemic has accelerated and strengthened trends that were already existing. Take, for example, the utilization of technology in a growing numbers of sectors. Education, healthcare, all of these will be probably revolutionized by the fact that technology can really help give access to broad populations to healthcare services and probably also make them more affordable. And the same goes for education, which means that the whole sector may actually go through changes that are on the one hand disruptive but for some, but very beneficial for others. Equally, there will be a sustained change in how we work around the world, especially in services. Many corporations have made now the experience about remote working and can probably rethink things like occupancy and office spaces in a major world, as well as activities that have an immediate incidence on their business travel, for example. This will not be without consequences for areas like commercial real estate as well, for example. And also, when thinking about supply chains, there will be a higher emphasis now going forward on the security of the supply chain, the safety and resilience against disruption, as opposed to just the efficiency of supply chains. That could mean, for example, that production is organized in a different way, with implications for sectors like shipping, for example, and where production and supply chains move closer to the big centers of consumption of the world. There are really 4 of them, next to the United States, Europe, China, and Japan. We anticipate that the countries around them offering both low-cost bases as well as short distances may actually be among the beneficiaries of that near-shoring trend.
Let's go back to the markets. How much does interest rates matter? Is it a world where equities are really preferred over bonds?
How much will interest rate matter for the future of financial markets and actually the economy, as opposed to technology, for example? We think interest rates will matter a lot going forward. Look at just the public debt and also the corporate debt that has been accumulated and will continue to accumulate throughout the period of the COVID crisis. Many governments now are having debt levels that are higher than their whole GDP. And this will imply, for some of them, a high sensitivity to interest rates. The sustainability of this debt is going to be in very close relation to the level of interest rates. In some way, the pandemic has really is leading to interest rates being just simply caught at a very low level. Now, this is of importance for investment strategy and for investors more generally, because it points to the need to rethink asset allocation in a way that takes account of that low for long interest rate environment. And that should particularly be emphasizing that investors don't hold too much cash. This cash will simply not bring anything, and instead turn to equities that are probably among those asset classes that benefit most of a persistently low interest rate environment. Now, technology is playing equally an important role because over time it has proven to be rather deflationary. It is making processes on the one hand more efficient and on the other hand also less costly. So overall, the fact that we should anticipate very moderate inflation rates to persist equally for a long time is making low interest rates for long actually a very balanced situation and in some sense an equilibrium situation for the world economy.
We are now approaching to the end of our conversation. Will the above analysis will change after the US elections and the government?
As the world is looking towards the outcome of the US elections, of course, there are many questions on how this outcome is likely to shape the economy, but also financial markets for the years to come. As it stands now, the results are not yet clear, and it will take a little bit of time before the legal processes that are currently in course are pointing to a result. But what has already been reflected by the first reactions of financial markets is we can anticipate, regardless of who is the next president of the United States, a Congress that will probably be split and power that will be shared between and across the two parties. What this means for financial markets and for economic policy in the first instance is that extreme policies just simply are not going to be possible to the same extent as they would be under a sweep of both houses of Congress to the same side as the next president of the United States. And this move towards a more moderate economic policy is good news as far as regulation is concerned. This is explaining why, for example, the technology sector has breathed a sigh of relief, as was seen in the rally that followed the results as they were becoming available. And it does, however, also put into question the ability and likelihood of passing a very large next fiscal stimulus package. In fact, it points rather to a more moderate one, but perhaps a fiscal package that is agreed upon more rapidly now that the elections are passed. And for interest rates, this has been the most important implication, because it has helped interest rates just come down a little bit, and is not suggestive that there is a risk of a rapid rise, as would have been with a very large fiscal package. So altogether, for now, financial markets are taking it on the positive side, but very rapidly, financial markets will focus on what is really the most important next development, and that is the rapidity with which vaccines can be produced and made available for the broader population, because this is really going to impact economies for 2021, and then also set how central banks and how governments will actually react to it.
So, Nanette, thank you very much for being with us today. It was fascinating and very interesting. Thank you very much.